So now let's talk a little bit about income, how it's reported, and what is included. Now, Schedule Cs can come in all different shapes and sizes. Individuals who are independent contractors receive this form called the 1099 NEC, non-employee compensation. Not everybody who receives one of these would be required to file a Schedule C, but any income that's received on this would be subject to self-employment tax. Now, you might receive it as be a contractor, but you really don't have a business, and you really don't have any expenses to offset it. Maybe you, I don't know, maybe you, try and think. Good example, so soccer coaching. My husband has done soccer coaching and receive a 1099. It's not a business. He doesn't run a business of soccer coaching, right? But he does it just to get a little extra money on the side and to try and keep himself fit and to stay in the game. So he would get a 1099 NEC reporting the income, doesn't really have the expenses to offset it. So that income really wouldn't require a Schedule C. Still has to go on the tax return, but it wouldn't require that whole Schedule C income statement, right? Now you could use it if you wanted, if you had expenses to offset it, but there are times when individuals will receive one of these and they really don't have a business. If that is the case, there is a place on the tax return to put that income so that it gets reported, it's other income. It's still going to be subject to self-employment tax though. Now, if you do have a business though, you might also get these, receive these from other businesses. I think they've got an example here, Jason. So Jason owns a drywall business. He contracts with various general contractors to complete drywall work during the construction of numerous personal residences. So he's like a subcontractor, right? Somebody hires the contractor, the contractor hires him to do a lot of the work. He's paid directly by the contractors, but he's not an employee of any one contractor. He reports the proceeds from his work on Schedule C. If he worked for only one contractor, he would be considered an employee, and Schedule C would not be required. Okay, so he might get several of these 1099s and report all of them in total on his form Schedule C under gross receipts. Here we've got Jake. Jake is an accounting systems professor at State University, also has a consulting business through which he performs accounting systems analysis for local industries. He consulted with 5 different corporations and received 5 forms 1099 NEC, $2,500 each, in addition to a W-2 from State University. He would be required to report the $12,500 from the 1099 NECs on Schedule C, line 1. He would report his wages separately on line 1 of Form 1040. He does not combine the wages with the gross receipts from his trade or business on Schedule C. The different types of income, they are taxed differently, so they have to be kept separate. So the question here, does the amount reported on line 1 of Schedule C always match the forms 1099 NEC? No, in fact, oftentimes they don't match. Just because you didn't get a 1099 NEC for income that was received as an independent contractor does not mean you don't report that income. You still have to report it, even if you didn't get a 1099 for it. So sometimes and oftentimes they will not add up, right? So for example, let's just say you have an accounting business, okay? You're all accountants. Let's give you an accounting business. And your accounting business is a sole proprietorship. That you report your income and expenses on the Schedule C. All right, cool. So in your accounting business, you do a lot of different things. One thing you do is you do contract work with another accountant. Okay, so you got some contract work with maybe a couple of CPAs, with 2 CPAs. And then you also, you do some, let's say you do taxes during tax season, and you have your own clients, right? So tax returns. And when you do this, so the contract work, you're getting paid by the CPAs. With the tax returns, you're getting paid by the clients directly. With the tax returns, you're not going to get a 1099 NEC from those tax clients. They're not required to give that to you. Doesn't even matter how much they paid you. They're not required to issue you a 1099 for that work. But the CPAs, if it's more than $600, they are required to issue you a 1099. So let's just say your total, let's see, one CPA paid you $1,000 and one CPA paid you $1,500. Okay, and you got a 1099. So your total 1099s were $2,500. But you also did, say, I don't know, 12 returns that you billed your clients, $300 a piece, average of $300 a piece. So you made, what'd you make, $3,600 in total. No 1099s were received. So you got $2,500 of 1099s, but in total, your total income was $6,100. You have to report the $6,100. So your total 1099s will not necessarily equal the total income that you're reporting on that Schedule C. Okay? Questions? Okay. Or if you made $200 from a CPA, they're not required to issue you a 1099 until it gets up to $600, but you're still required to report the income. All right, cost of goods sold. So most Schedule C taxpayers, sole proprietors, will report their income and expenses on a cash basis. And remember, so we're reporting it as we receive the cash. So we're not going to report in the income section any income that we haven't yet received, and we're not going to claim any deductions for expenses that we haven't yet paid. Inventory, however, is treated differently. We are going to treat that on an accrual basis, which means that if we purchased items of inventory to sell, if we haven't sold them yet, we're not going to expense them yet. Okay, so that we still report that on an accrual basis for tax purposes. Same calculation that was used. Well, this just follows the Schedule C, the cost of goods sold section here. Beginning inventory plus purchases plus labor minus ending equals our cost of goods sold.